Well, welcome to Trading a Smaller Account, everyone. Welcome to this Friday on the eve of a long weekend. Monday is Martin Luther King Day, and I hope you're doing something fun, to celebrate and to recognize that that day off. But today we've got 45 minutes together to talk about trading a smaller account. So I want to get right down to business, but I always like to start by recognizing those that are joining us live. If you're watching this in the archives and you're able to join us live, we meet Mondays and Fridays at high noon Eastern. Would love to have you join us. And things get going usually about 15 minutes ahead in the chat. There's tons of people in there, sharing ideas and greetings and all of that. So hello to William and Chad and Daniel and Ricebird and Alfred and BJ and Alina and George and Neil and Chicken Little. Somebody's called themselves Chicken Little. I mean, I gotta say I love that. And the rest of the gang, thank you all for being here. If you are not following Connie Hill and I, and we've got the privilege of having Connie Hill with us in the chat today, we encourage you to follow us in the land of X. We're posting content there on a daily basis that we think you'll find helpful. Connie Hill CS is Connie's handle, Barb Armstrong CS for Charles Schwab. If someone reaches out to you and offers you a Bitcoin or crypto deal or private education for a fee, it's not me, it's not Connie. Take a screenshot, let us know. Those are scammers and ne'er-do-wells, and we will get them shut down lickety-split. Okay. We reset this account in January. We trade both stocks and options in this class. Know that options carry a high level of risk and aren't suitable for all investors. We use the Paper Money software application on the Thinkorswim desktop platform. Say that 3 times fast. It's a brilliant place to learn, to make sure that you understand your trading plan and the strategy, and that you've practiced it as many times as you feel you need to before you consider trading it in your live account. One of the nuances or differences is that Paper Money will never assign a short option early, but that can happen in a live account. And for any of us who have traded for a long time, we may well have had the opportunity to experience that. So this account, we reset it to 25,000 at the beginning in the first class of the year. And then I went to Maui for a week and a bit, but we're now back. Our trading rules are the same as they were last year. Our max position size is 5,000. And our max risk per trade, 500. Our focus in this class is on shorter to intermediate term timeframes, although we did have some stocks last year like GoDaddy, and we could look at that one, GDDY, that we did buy and hold through the end of the year. Someone asked in class yesterday if we're going to do another in-person event in Houston. We did one last year in December. Sadly, I wasn't able to be there. But maybe this year, if and when we go to Houston, I'll be able to attend. So we'll just have to see. So I have just a couple of quick announcements, and thanks for leading me into talking about the live events, because one of them is that we're doing over 20 live in-person events this year. They are free to attend, and let me just bring us over to in-person events. And if you just go to schwab.com coaching live events, and I'll put the link. I will actually put the link in the show notes after the class, but I've also just put it into the chat. The next event is next weekend in Seattle. I will not be at that event, but I will be at the event in Atlanta the weekend after that. And if you are coming or plan to come, please come up and introduce yourself. I would love to meet you. And when I was a client, I loved attending these events. I got to just focus on the world of investing and trading for 2 whole days. This is a 2-day event. First day is technical analysis. A second day is getting started with options. Ben Watson leads the pack. He does a fantastic job. They're free to attend. We'll have the coffee on. We provide breakfast and lunch. would love to have you there. We also, and I know a lot of you guys have already got your beginner patch in trading options. There is an advanced options class coming up in Chicago the weekend of March 21st. And, we'd love to see you there. Registration will be opening soon for that. So just to give you a heads up that that is coming too. Okay. Yeah. And then there will be an advanced options, another one coming up in Dallas. All right. So, these in-person events, I encourage you, if you want to go, sign up earlier rather than later, because even though we're booking bigger venues, because attendance has skyrocketed at these events, they do fill. So there's that. Okay, so there's that one. The other announcement I wanted to make, someone reached out to me one time after I covered this topic in this class on a Friday, talking about, how $5 invested over time, if you took half of it and invested in an index or ETF or something that tracks the S&P and half in something that tracked the NASDAQ, if you started that and allowed it to grow for 47 years, you'd have over $1 million. In fact, I think the number was 4.4 million. This is and this is just an example, but this is a 12-minute video. It was put up when I was in Maui. I recorded it just before I went away. And I'd like you to, if you haven't watched it, if you would do me a favor and watch this one, and then let me know what you thought. And then if you liked it, share it. Share it with either, and I'll put in a link to this in the chat as well. But yeah, let me know what you thought. And if you liked it, share it and just help me get the word out, because I think this is such a powerful message. And someone had commented after I did an example in this class that they were so impressed by the power of compounding that they made their granddaughter or son watch the first part of the webcast so they could see it. And then they gave them a little seed money to start their own account. And so I thought I'd like to do something standalone that can be easily shared. So there's that. Okay, so now on with the program. Let's take a look at what's going on in the markets. And if we, take a step back to start, and we show price as a percentage, and we come out to the last year, in the last 12 months, the S&P 500 up 26%. And today, if we looked at a one-day chart, we've been flirting with 6,000. We've hit it 3 times. We're now at 603. Who knows where we'll be by the end of the class? But I'm kind of looking at this and definitely bullish, right? Like we're up, in the intermediate term, we're up 27% in the last year. So it's hard to say that is anything other than bullish, right? Like if you watch that little video and I look at the performance of the S&P over, 100 years, over 30 years, over 15 years, I mean, that was an extraordinary year. But, the bulls maybe, having a beer with the bears and, having a bit of an argument over how they see things now. And by that, I mean, some are kind of looking at this and saying, and it's not, perfect, but are we seeing maybe, that we're range bound here? Or could this be making people nervous, saying, could this be a bit of a head and shoulders setting up? We did come down below that line and then immediately pop back up. So if it looked like a breakout to the downside, it, turned out to be a fake out. But we definitely have some consolidation going on here, since kind of this November timeframe. And, Santa failed to show up for the rally again this year, which was kind of disappointing. Like, oh, Santa, where art thou? Well, he wasn't at the rally this year. So, we kind of had a quiet start. But, this week, things are, looking not too shabby. And so, if the bulls and the bears are, having that conversation, the bulls might be saying, yeah, well, hey, in the last 5 days, we're up 4%. We've averaged 1% a day. So, hey, Mr. Bear, you and Chicken Little can go back to the shed and, have another nap because it ain't spring yet. Yeah. So there we go. But overall bullish, we're at that kind of 6,000 mark, which a lot of people are looking at kind of as a major marker. And so we want to keep that in mind. When we look at the NASDAQ, again, up what? 28% in the last 12 months. It's come down a couple of times and flirted or had a bit of a tussle with the 100-day moving average. But a lot of the last year, it was trading above the 30. And then we've had this pull back to the 100 again recently. Excuse me. Let me have a quick drink. Now, I drew this diagonal resistance line, and tried to hit as many points as I can. Some might say, well, I wouldn't put my line like that. And this is the art of technical analysis, right? So some might say, well, I would draw my line more like this. Well, that's legit too. Maybe that's a better line. Yes, Chicken Little is our classmate today. Excuse me. Hold on. All right. So, and it looks like we're breaking out. We've got a bit of a diagonal resistance breakout, but then we've got this hammer at the top. And is that saying, could we be reaching the top, bumping our head on this resistance area, and might we be about to pull back? So it's been in a bit of a range. And if I duplicate this line, if it starts to come down, where might it come down to? Kind of back to this 100-day moving average kind of thing. Okay, so how about the Dow? Well, the Dow, it too, looking pretty respectable, up 17%, not as much as the NASDAQ and the S&P, but, it's still not too shabby. And, this is now above the 30-day. This had a pretty big pullback. From top to bottom, I measured it yesterday. I think it was like 13%. 7. Well, I was only off by like 100% on that. So, a 7% pullback. But the last 4 days, it's been pretty darn bullish, hasn't it? So, we're seeing a little sunshine there. And then how about the Russell? Again, up for the last 5 trading days in a row, and up 17% or 16 ish, 16, 17% in the last year, which is again pretty respectable. But we've had, I call this more of a Tums chart. Like, it does a lot more upping and downing, doesn't it? We've seen a lot of volatility with this one. And then if we look at the VIX today, continuing to pull back. So, where Monday we were sitting around 18, which is the, higher end of the range. We're back here at 15.7, so it has continued to fall, our volatility index. And then as far as sectors, who's leading the pack? Well, if we come to our public watch list and look at the sector indices, and if anyone is new here today, feel free to type a greeting into the chat so that we can welcome you. And know that, like, if you're wondering how I added these, in the trade management mini session playlist, which I'll put a link into at the end of this class, if you scroll to the bottom, there's a bunch of short videos on Thinkorswim how-tos. One is on customizing charts. I have another one on watch lists and how I set this watch list up. But consumer discretionary, leading the pack in the last 3 months, followed by communications and financials. And, I've linked my chart. So if we look at this, like, I think pretty much all the sectors kind of pulled back in the month of December. We hit a high here, December 18th. And then we had a bit of a pullback, but, moving to the upside. So if I come to a 6-month chart here, and today crossing that 30-day, communications, in a bit of a range here. And financials absolutely taking off, in the last 5 or 6 trading days. And these are the companies in the financial sector. A lot of the banking stocks and financial stocks kind of kick off this earnings season that we're in the midst of now. And so we've seen a lot of, companies come with earnings. So Goldman Sachs, does that look a bit like the financial sector? JP Morgan. So now you see what's kind of driving this. And if you wanted to come and you could look at just a sector. So you could come to a public watch list. So we got a lot of green on the screen today, overall on the S&P. And if you wanted to see how many stocks were up, we can then come to Index Watch and say, okay, we want to pick the S&P 500. Over 80% of the stocks in this index are up today. How about the NASDAQ? 90 out of 100. We have one kind of tanking here, CrowdStrike. Oh, that's interesting, because I had that one on my list. So we're going to look at CrowdStrike today, even though it is pulling back. And who's, really crushing it? Intel. And how do I know that? Because if I hover over it, it'll tell me what the ticker is. And then if you come down here, it will tell you how much it's up. It's up 8% today. Okay. But you could also pull up a sector. So we could say, hey, we'd like to see sector indices, sectors and indices. Pulling up all of them. I thought I could bring up just the financials. You know what I could do is I can come to a watch list here and come to a personal watch list. And I have created one for the financial sector. And so you can see here, there are 71 stocks in this sector that are part of the S&P 500, and 60 of them are up today. TFC and PayPal are leading the pack. The only one that's down is State Street. So continuing to be strong. So we do have a lot of new people here. So welcome to all the newbies. And know that this is an intermediate level class. And by that, I mean that the example trades that we're going to play, let's come and look at some charts. And I will say that, I'm looking at the charts today, I'm looking at the S&P, and, we've been doing this kind of consolidating, kind of range bound dance since it kind of gapped up here on the day after the election. Okay. So I'm kind of looking at it and it's like, I'm not quite sure of what to think. And then I had to remind myself that, do we trade what we think? No, we trade what we see, right? We trade what we see. Okay. So let's look at Nike. So I'm looking at Nike. It is not having a good time. Like, it's down 4% year to date. It is, if we pulled out a 1-year chart, I mean, look at this. Looks like it's continued to downtrend. If we went to a 1-year on this stock has been on the struggle bus. So, it is down 30% in the last year. And so I looked at this and I thought, okay, so some stocks are going up. Most stocks are going up today, and Nike is one of them. But do we think that this downtrend might continue? And could we sell a short call vertical here around 72? And the idea here is that we're expecting it not to go above 72. And just in case we're wrong, we're going to sell a call. We're going to buy a call to define our risk. But when I come out to the trade tab and I looked at this, because I look at some of these ahead of times and say, well, if we go out about 21 days and we look at this 72 strike, we've got a 44 delta, which is saying we've got a 42% chance that this could end up in the money, so that we could be wrong. We've got an 83% chance that it'll at least come up and kiss it. But, you know, if you look at the example trading plan, do we trade more than 1 million shares a day on this? Yep. Do we have lots of volume on the open interest and the volume? Yes, we do. Do we have a tight bid-ask spread? Check, check, check. So if we come and we look at selling a vertical, we get, if we did the 72 and the 74, we'd get 64 cents. Now, is that worth our while? And how do we figure out if it's worth our while? Well, what are we risking? The most we can theoretically lose is $2, less what we got paid from the trade. So if we come out here and I switch my gadget to a calculator, if I can make $64 and I'm risking $1.36, that's a 47% gain. And if we look at our example trading plan, our example trading plan says if we're in it for 21 days, we want at least a 21% return on risk. And it's just a way of trying to create an apples to apples comparison for different time frames, you know, versus if we went out to say the February monthly, which would be 35 days out. And so if we look at this and we say, hey, we could make up to a 47% return on a trade we're in for 21 days, and then we get the bonus of the markets being closed on Monday, you know, we might be okay with taking that risk. Now, how much can we risk? We can risk up to $500. So 160, if we did 3 contracts, sorry. How much are we risking? This will do the math. We're risking $408 to potentially make $192. And that is a kind of risk reward that we often see with a short put vertical. And some might say, well, I want to see a 50%, you know, return on risk. Well, then you wouldn't place this trade if that was your trading plan guideline. But ours is that percent a day, not that we're suggesting that that's what we would make per day. But so if we look at that and then say, and we want to definitely close it out before it goes into expiration, but if we're skiing or golfing or walking the dog, and this hits 80% of our max gain, we're going to create an opposite order and say, hey, when this gets to the point where it's worth about 12 cents, so I've just taken 65 times 0.2, that's actually 13 cents. When this is worth about 13 cents, I'd like to buy it back to close out the position, take my gain, and close out the trade. And you're saying, well, I'm making $52 a contract. Yep. So if this goes according to plan, how much would we make? And I'm not taking transaction fees into account here, about $150. And in this class, we call that a base hit. This is a short call vertical. And so this is a bearish to neutral trade. Okay. So this is did I call it a short put vertical? Okay. I'm going to talk about buying stocks on sale one day. So thank you for reminding me of that as a topic. So we're going to put that in our short call vertical group. Now, some might say, why would you place that? Would a trader consider placing that trade today when it has moved up? It hasn't moved up very much, it's not even 0.1%. It's moved up 6 cents because as it's approaching, we might get a little more premium. Okay. How do you get the bars rather than a heat map for the Visualize tab? When you come to Market Watch, you come to Visualization and you click Index Watch instead of Heat Map. heat map, index watch. And then you put in what watch list you want in there. Okay. So coming back to our charts. So with this one, this is a bearish to neutral trade. And the idea here, just let me draw this out quickly. Okay. We'll get rid of my little head and shoulders. So we have sold the 72 and then we have bought the 74. And as long as it stays below, so if this is in fact does shape up to be a bear flag and continues down, we are happy campers, we're good to go. If it just goes sideways, we're good to go. It's only if it breaks above 72, that's when our, we've got the frown going on. But we've defined our risk so that even if we take a max loss, we are not going to blow up our account. Okay. Okay. So that's that one. And I'm just taking a little more time to explain because we have a lot of new people with us today. Okay. So there's Nike. Let's look at Lulu. So, when we back the truck up a bit and we look at the last year, this stock spent a long time on the struggle bus last year. Okay. So when we look at it, it had this big V formation and then it gapped up on the last earnings. And then it came back down to this previous resistance level. And that really has been serving as support. And as much as this stock has been on the struggle bus, it is still a $370 stock. And from this low, that's a pretty dramatic increase. It's up 66% since it hit that low back in August. And you may have said, well, haven't we missed this? It's up 66%. Are you nuts? Why would we trade this? Well, because, an object in motion might continue in motion and there's no guarantee, but if this support level holds, even if it goes sideways, what strategy might accommodate a continued sideways trend? Go ahead and type that into the chat. Okay, go ahead and type that into the chat. So I'm thinking maybe a flip of the last trade that we did. And what was the last trade that we did? Well, we did a short call vertical where we were expecting Nike to stay below a certain level. With this one, could we maybe come here and sell something around the 370, sell a put? Yeah, you guys, see, you don't even need me anymore. So if we sell a put, which means we're agreeing to buy the stock, and you're going, hello, we've got 23,000 in this account. We don't even have 37,000 if we did one contract. It's like, no, but if we sell a put and it is put to us, if we buy a put, it gives us the right to sell it. And so we have an exit plan or a damage control plan in place. Okay. So here's our plan to make a little money. Here's the damage control, all wrapped up into one nice, tidy little package. Okay, so let's go to the trade tab. And on Lulu, say, okay, if we came out that same 21 days, now this is a weekly. What's the advantage of weeklies? Well, weekly sometimes, like if we come out here to the monthly, these are $10 wide strikes. And we very often cannot afford to trade a $10 wide strike because we're taking too much risk. If it's over 500, we have to say, nay, it's out of our snack bracket. So if we go to a weekly, we now have a $5 wide opportunity. And again, does this trade over 1 million shares a day? On average, yes. Do we have a tight bid-ask spread? And we define that as less than 10%. So is it less than 90 cents? It's 40, so check. Do we have at least, or here it's 35, So do we have at least 20 times the number of contracts we want to trade? Yeah, because we're probably not going to do more than one, maybe two, because it's $5 wide. So if we say, okay, next question is, can we get enough premium? Well, $1.75, how much are we risking? $5 minus $1.75, so $3.25. So if I divide 175 by 325, that looks like about 50% to me. So it's 54% is our potential gain. And so you might say, like, and I am such a visual person, I want to see it on the chart. Well, it's on the chart. So if we kind of edit this and say, okay, there's our short strike. If we do this short put vertical at 370, 365, and is it February 7th? Maybe? I'm guessing. And then say show it on the right. Now when I come and I'm looking at my trades daily, you know, I can look at this and say, as soon as I look at the chart, I can see what I'm aiming for. I'm aiming for it to stay above, right? So if it goes up, happy camper. If it goes sideways, we're good to go. Where we get into trouble is if it goes below the 370. And we'll discuss that. Yes. Yes, this is the second time I've talked about John Pinette today. I love that comedian. If you're not familiar with him, you can go out to YouTube. Yeah, he's gone now, but man, he always made me laugh. Okay, so this is Lulu trade. We've got this teed up. And again, we're risking 325. How many contracts can we do and honor our position sizing rules? And you know, sometimes with rules, we can massage them a little, but there are some rules we do not break. Position sizing is a rule we do not break. And when I really start harping on this is, believe it or not, when we've had a really great run and we've had 10, 12, 15 trades in a row hit our targets, and we're starting to feel like we are pretty brilliant at this, let's face it. And then you start thinking like, oh, I should be able to take a little more risk. And then something happens like last year, the first week of January, when I went to Maui and couldn't access the account, and we had all kinds of bullish trades on, and the market had a significant pullback. We were down over $2,000 in a week. You know, and you know, that was a flesh wound, but it didn't blow up our account because we honored the position sizing rules. So we're going to do the same thing here. First trigger sequence, opposite order. And we're going to make this 34 cents. Good till canceled. Confirm and send. Now, what's a rule that we can, you know, or a guideline? Well, our target is to get out when we have an 80% gainer at 34. What if we get to 36 and then we see, you know, a hammer up at a resistance level? We say, oh, this may be pulling back. We are within a stone's throw of our goal. If I can get out for 36, I'm going to take it. And so sometimes we can, you know, massage our exit rules, and you know, totally cool with that. And we'll be managing these trades as we go forward. So we're going to put that in our short put vertical bucket. You always want to read these notes. You know, this is a non-standard expiration or a weekly expiration. We get it. We know that. Okay. So there's Lulu. Let's look at TTD. So here is the trade desk. And again, you know, this has just been like marching up the hill. And then we hit, you know, the beginning of December, and it pulled back and it rallied. But, you know, if we draw this diagonal resistance line, it looks like it's breaking out today. Now, some might say, yeah, but it's still below the 30-day moving average. And you're right. And it's also, you know, it's above this for one day. You're right. And so you might say, you know, and then we've got earnings coming up, not till the 13th, but, you know, we could do a 21-day trade. And then you might say, well, you know, what caused it to gap up today? We might want to come and look at the live news. And if we don't see anything, so BMO Capital, which stands for Bank of Montreal, you know, they raised their price target to 160 on this stock. In January 6th, Trade Desk price target raised to 145. It's now sitting at 124. That was Wedbush. Morgan Stanley raised their price target to 145. So there must have been some kind of, you know, news that came out, but it you know, so far, you know, that was January 6th. So, you know, it had this big move up and it's come back down. And some might say, you know what? I'm not sure if this is a breakout or a fake out. And so I'm going to wait. And so some might choose to wait. Now, if you said, you know, I think that, you know, given what I've read, and I'm not saying I've read anything, I'm making stuff up here beyond what we've looked at here. You might say, well, if we were to do a trade, we might want to come back to this 120-ish kind of line. And would there be enough premium? You know, and there might not be at the 120-ish kind of level. And so if we come out to the trade tab and we come out this 3 weeks and say, if we did this 120, what are the probabilities? And this is probability of it being in the money, probability of it being in the money, 33%. So that means we have a 67% chance that it'll expire worthless. And so if we looked at that and said, okay, if we sold a vertical, what would we get? And let's say we did a $2 wide strike. Now, somebody asked me on the first one we did, why we did a $2 wide strike. And we just did that because fewer contracts, fewer transaction fees. But if we go, say, $5 wide, like here, we're risking $1.50 to make, well, $1.43 to make potentially 47. So that's about a 30% return on risk-ish. Like if we take our 57 divided by 143. So that's almost 40% actually. So if that's 39%, you know, and we say, well, and we've got 3 weeks and time keeps ticking away even on the days the market is closed. If we were willing to do that, how many contracts would we do? We'd do 3, single order, first trigger sequence, right click, opposite order, and you'd make this 10. And we'll watch this closely and you might say, hey, if this breaks below, I'm just going to exit the position. I mean, we're going to look at these on a daily basis regardless. How much are we risking? 438. How much can we make? 162. And we're putting that in our short put vertical bucket. I think I missed it. There we go. Now, if you're new and you're thinking like, what's she talking about with these buckets? When we come to the monitor tab, well, we can see that the trades, that we've placed today. So we've done a short call vertical on Nike, which was bearish to neutral. And then we've done a short put vertical on Lulu and then one on the Trade Desk. And then when we come in here and we look at this, one of the things that we'll want to do, we've got a profit and loss percentage here. And you can see often when we first open a trade, it will be negative because of the bid-ask spread, okay? eBay and Google, we did long calls on those. So if you want to know how to set up groups, go to that trade management mini session folder, this one where the power of compounding is at the top. And if you scroll down to the bottom, first of all, the trading plans. So we talked about a short call vertical. Here's an example trading plan, you know, a 20-minute call on that. And then long call verticals, there's one on short put verticals as well. So these are just extra resources I created for you to access. And then down at the bottom, here's, at 11 minutes, on how to customize your monitor tab. If you'd like to have profit and loss percentage and those kinds of things in there. Okay. Okay. So we have just got 5 minutes left. It goes fast, doesn't it? So let's just look at a couple of charts and then we'll wrap up. So when we come and we look at Walmart, well, this has been going sideways. So could we sell something, below that 90 kind of dollar level? And could we get enough premium? How about Costco? Notice these are consumer. I would think Costco's consumer discretionary. But, could we come down here below like this 905-ish level and do something like a short put vertical? Or are you looking at this chart and feeling kind of bullish and thinking, maybe we could do a long call vertical? This is a very expensive stock. So we can't afford, in all likelihood, to buy a call. They're just too expensive. How about CrowdStrike? And I had said we'd look at CrowdStrike. So CrowdStrike has been in this range for quite some time, hasn't it? It kind of entered it back, just before Thanksgiving, and it keeps coming down. And I've used this analogy many times. My father-in-law was a big fan of medieval history, and I kind of look at every time something comes down and kisses a support level, it's like another knight coming to guard the line. And so it's hit here often. And even though we have this bearish engulfing candle, do we think, technically speaking, that when it comes back down, this level might hold? Now, if we were meeting Monday, I'd say, hey, let's look at this again on Monday. But, if this is the assumption or the projection, you might want to look at that. And if not, maybe we'll look at it Wednesday in trading price patterns. We treat that as a companion class to this one. And then last one we're going to look at is Marvel, just other ones to kind of have a look at. And then Chewy has continued to be kind of strong as well. And we looked at that in Getting Started with Technical Analysis on Tuesday. And I believe that we did place a trade on that. We had this wedge pattern, it broke out, and we calculated based on the width of the wedge how far we thought it might move. So guys, that is a wrap for today. I don't think that there was a survey, Connie. If there was, please correct me and repost it in the bottom. But here's what I'd like to ask of you. One, if you haven't subscribed to the channel and you're new, it's free to do that. So I consider hitting that subscribe button. And it just makes this content so much easier to find. Then hit the like button. It helps move this up in the YouTube algorithm so more people can find this content. And it also lets Connie and I know that you found this helpful. What else? Like, subscribe. Don't forget to follow us in the land of X, Barb Armstrong CS, Connie Hill CS. And then if you would do both me and yourself a favor, if you haven't watched The Power of Compounding, it's in the trade management mini session folder. I put it right at the top, gave it its own color, and would love your opinion on that. If you'll put an opinion in the comment section once you've watched it, I'd appreciate it. And so guys, what did we do today? When we do have a survey, one of the questions or comments that often comes out is, would you please review the trades that we did? And so we did these 3 trades. They were all short verticals, a short call vertical on Nike and short put verticals on Lulu and TTD. So guys, thank you. Have a really awesome weekend. Get out and hug someone you love. If you're looking for a baseball or a football team to cheer for, might I recommend the Detroit Lions this year? And other than that, guys, stay well, and we will see you in a webcast coming up soon. Up next is, I believe, advanced charting with Cameron May. And then, so that's a wrap. Have a good day.